Okay, Bitcoin went from 70,000 to 110, 2.5 months based on Trump. Maybe he delivers these things in the back end, but right now, where's the money? Maybe the community will demand something about it. But at the end of the day, even without all that, there's a lot of hate. And when there's a lot of hate, there's a lot of opportunity. These are the massive changes in sort of the economics of the world that will bring crypto, the only free market left in the world, and to an extent gold, to levels that fiat price levels that we would not find, that are unimaginable.
The U.S. is facing an exploding federal deficit, and the financial system is hanging by a thread. With political games, skyrocketing debt, and a potential crisis looming, Arthur Hayes breaks down how all this could trigger a global meltdown. But that's not all. There's a twist you won't see coming. Stay tuned, because you need to know how this impacts you.
On the other hand, you have a federal deficit that's exploding higher. And I know people like to cite the Department of Government Efficiency, the meme department. That isn't a department at all. It's literally just an advisory position that Trump created for his boy Elon. An actual department requires U.S. congressional approval, and that hasn't happened yet. I have to say it won't, but DOGE is literally just an advisory body. It has no power. Yes, Elon can memify prolific government spending as much as he wants, but that's not new news. I don't think politicians particularly care. And if you're going to get reelected in 2026, are you going to go against your seniors and the defense industry and cut their spending, which is the major, 70% of government spending in the US is healthcare and defense. Those aren't getting cut, in my opinion. So, the deficit isn't going anywhere. You have an antagonistic Fed. You have a Treasury maturity profile that's completely fucked up because the US has to roll over something like $6 trillion of short-term debt at higher rates this year because Yellen wanted to juice the markets for Biden and Harris during their term. And so you have all this coming together, and you have a debt ceiling issue where whether it's today or tomorrow, I don't know when the day is, the US government cannot net issue any new debt to fund the government. And so Trump has a choice, I believe. He can either have a crisis happen today or, in the near future, 3 to 6 months, in terms of, an antagonistic Fed, a Treasury maturity profile that is not commensurate with affordability for the government and its programs, and the inability of the banking system to buy more of this debt. And the trigger for sort of, a little mini financial crisis could be, okay, I'm going to tell Bessent, the new U.S. Treasury Secretary, that he should not run down the checking account of the government to help forestall the government shutdown. Let's have this debt ceiling fight today. Every time there's a debt ceiling fight, everyone gets all up in arms. People get afraid that the U.S. government's not going to, pay out on its bonds, which is ridiculous. Of course, they're going to raise it. It's just a political game, and it depends on which particular congressperson or senator gets their piece of pork for their district. And so once they work all that stuff out, it'll get raised. The question is, what happens in the interim? Do we get sort of a liquidity flush out, get the Fed seeing religion again? You need to print money. You need to allow the banks to put as many treasuries on their balance sheet as possible to help Trump and Bessent enact their campaign promises. Stop being an asshole for the financial system. Pax Americana, the empire was going to crumble unless you give us the free money. So that's sort of my premise on the American side of things, of why I think it's politically expedient for Trump to have the bad thing happen right now when he can blame it on Biden and Harris. Yeah, and I also would add that China was supposedly reflating their economy, is going to be printing trillions of yuan to help their property market and asset markets as well. They were going to allow their currency to weaken. That's what happened from September of last year up until early January this year. And for whatever reason, there's lots of speculation as to why. I don't know why. Xi Jinping put the stops on that. The PBOC is no longer injecting buying government bonds, and they now are strengthening the currency, which is negative for fiat liquidity globally. So there you have the number 2 or number 1 largest emitter of fiat liquidity stopping in its tracks before they negotiate with Trump in terms of what the economic situation between US and China is going to look like. And then the last piece would be the Bank of Japan has raised rates 25 basis points at their latest meeting last week. Again, yen is the premier funding currency of all financial assets. And so if you raise the price of yen money and the currency appreciates, people have to sell stuff. What do they sell? They sell US tech stocks and they sell US treasuries. So the largest 3 economic blocks and countries with regards to fiat liquidity are all either slowing down the pace of addition of liquidity, raising the price of money, or outright contracting the amount of money in circulation. So I think for a very short period of time, we have a perfect storm of, okay, Bitcoin went from 70,000 to 110, 2.5 months based on Trump. Maybe he delivers these things in the back end, but right now, where's the money? And so that's why I think that we can have a meaningful correction, shake out some people, cause people to not believe in this bull market. And then that's when we get the free money, the printed money printed go burr, and we resume the bull market and go much higher.
In the market that's coming, we have huge narratives that could potentially play out here. Obviously, real world assets, RWA. A lot of people pointing to that to potentially be kind of the big mover in this cycle. AI agents or the crossover between AI and crypto. Do you find any of this to be real and meaningful, at least in this cycle?
For sure. I mean, I'm a hater on the RWAs, but that's a different sort of situation. At the end of the day, there will be super successful projects in each one of these verticals. It's just not, you just can't be Ripple and Cardano in 2025. Do nothing and have a massive valuation. That was then, this is now. There's way more competition. The money can go elsewhere. So I think if you think that, oh, we need to have a 2020, DeFi summer or ICO 2017 again, things change. We have meme coins now. So go with where the market is. Does that mean that useful things are not going to get built? Of course not. Maelstrom, we're funding useful things. Hopefully we pick the next Athena of the next cycle. But at the end of the day, it's going to be harder and harder to pick those things because, the retail capital is done with high FDV, low flow VC coins. They want, instant liquidity on meme coins and trade their favorite celebrity or politician. Of course not. But at the end of the day, he's Donald Trump and he could do that. Right. The next person who does it, I don't think they're gonna be able to get away with it. So the community will demand, it'll get lower and lower and lower, right? Maybe the next person does 50% and then it goes 30%. And then, by the time some random, minister of parliament or legislator wants to launch their own political meme coin, the standard will be fair launch, no bags held, all this kind of stuff, right? And so, but the first one gets to get away with murder, right? And so good on him. It's a financial game. He's a financial guy, and he did what he did.
Arthur Hayes dives deep into the U.S. government's debt crisis, particularly the skyrocketing federal deficit. He explains how the government's reliance on defense and healthcare spending leaves little room for cuts. Despite some attempts at government reform, Hayes believes major spending areas are safe, which means the deficit isn't going anywhere. He also touches on the pressure mounting from the Fed and how the U.S. Treasury has to roll over a staggering $6 trillion in short-term debt. Adding to the drama, Hayes predicts that the looming debt ceiling issue could trigger a mini financial crisis, with potentially catastrophic consequences if not addressed soon. Stay tuned for what comes next, because the fallout might be even bigger than we expect.
The Electric Capital report still says that they have the most developers. That's all I need to say. You still have people building on Ethereum. We still fund lots of really intelligent people building new stuff on Ethereum. It's still, 3 or 4 times the market cap of Solana. So still the number 2, has name recognition, blah, 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 right? So I wouldn't count them out. I don't know the politics of the foundation. All I read is what's on Twitter and they're selling coins. That's it. Do I give a fuck about their mission or whatever the fuck? No. Sounds like Vitalik cares about the price. So, maybe he'll do something about it. I don't know. Maybe the community will demand something about it. But at the end of the day, even without all that, there's a lot of hate. And when there's a lot of hate, there's a lot of opportunity. I mean, and obviously they don't have as much name recognition as Bitcoin. So while the Ethereum ETF launch has been great, it hasn't nearly been as much of a knockout success as Bitcoin. And obviously the marginal popularity will decline as we go down the stack in terms of the market cap rankings. I think at the end of the day, what pushes people to reallocate is money printing, right? If my government bond portfolio is underperforming, if the economy is rocking and rolling and I'm only getting 3 or 4% on my bonds or in my bank account, then the crypto ETFs look like a good deal. But if that liquidity isn't there, then I'm going to stick with what I know, because I talk with lots of high net worth money managers. I'm like, oh, what are your clients asking for any of this stuff? And yeah, while in our echo chamber we think that this is really important, no rich people are asking for crypto in a big way, right? So it's still not a thing. And so yes, Bitcoin is a thing. Everyone knows what Bitcoin is, but the Solana ETF is not going to be as successful as the Ethereum one, as the Ripple one, as the Cardano one, or whatever down the line, unless you sort of get a mental shift. And that takes time, because at the end of the day, all these wealth advisors basically plug in a bunch of numbers into a computer. It tells them the historical returns, and they say, look, it did well in the past, it'll do well in the future. Don't fire me if it goes down in price. And so once you get enough history, then they can sort of reduce their career risk by putting people into these crypto products. And that takes time. And so I think crypto people have been impatient in terms of how long it's going to take for these really to impact the market. But if you think about it, like the passive investing movement has at its zenith right now, but this, ETFs were launched in the early 90s, right? And it's only now, 30 years later, that we're really seeing the real effects of this set it and forget it type of passive investing. And so I think we're gonna need some time for the salespeople around the world to start getting these things embedded into pension plans, all these sorts of like defined contribution things, all these set it and forget it type of investing programs. It takes time. So I don't think that if one of these launches tomorrow, it's gonna have a massive impact on the price of crypto. Well, I think if you listen to what Trump and Besson and all of his lieutenants want to do, they want to rearrange the world around the U.S. Take them at their word, whatever. But that requires a lot of money printing. It requires destroying the real value of government bonds in the United States. It's the only way they can do what they want to do. It requires massive amounts of bank credit creation to hand to companies to build things in America because they can't afford to do it because China's just so much better at it, right? So it requires trillions of dollars of money. It can only come via printing it. And then they're going to use the ability to have the world's reserve currency to essentially reflate America. That's in America. In China, they need to do almost the same thing, a little bit different, right? They need to pump up their property market, get the plebs investing in stocks again, get them confident again, get inflation up. They need to print yuan as well. Japan needs to sell a bunch of shit and repatriate yen, and the US doesn't want them to sell the stuff. So the US is going to give them the money so they don't sell anything, right? Europe wants to decarbonize, but then shut off all their energy from Russia and shut off products from China and continue having the biggest welfare state in the world. So they need to print money as well. So everybody needs to do the same things to fulfill their goals. And I think the catalyst for getting into gear is, Trump and Besson have been very clear. We're going to weaken the dollar, we're going to increase credit creation, and that's going to create growth. We'll see if that actually happens or not. But at the end of the day, they're going to try, and they've been very consistent in that message. And if you listen to some of the macro analysts, I read, Zolt and Pazer and some other guys who a lot of these people listen to, what are the things they're talking about? Devaluing the dollar versus gold, telling friendly countries, hey, you have all these treasuries that mature in 10 years. Well, we're going to stuff you with a 100-year treasury. You can't sell it. I'll give you dollars for it if you need them. But if you want U.S. markets and U.S. security umbrella, you're going to take your treasuries and turn them into 100-year bonds, which is a massive devaluation. Or you're going to give us your gold and we're going to give you this piece of paper. And if you don't like it, go fuck yourself. That's what they're telling people. And so it's going to happen. And these are the sorts of things. These are the massive changes in sort of the economics of the world that will bring crypto, the only free market left in the world, and to an extent gold, to levels fiat price levels that we would not find, that are unimaginable. And so that's why I think that's how we get to $1 million Bitcoin. It's 250,000 is a stop on the way. It's this realignment of the chessboard, and everybody on the board is going to print money to help themselves out.
As the global financial landscape shifts, Arthur Hayes makes a compelling case for why Bitcoin and hard assets are poised to skyrocket. With governments printing money to solve their problems, it's only a matter of time before the value of these assets goes through the roof. What does this mean for your investments? Stay tuned and hit that subscribe button. You don't want to miss how this all plays out. Until next time.